Welcome back, everybody. This is Johnny. I want to talk about 7 cheap stocks, relatively under $10 range, $7 range, that I think have potential. Keep in mind, this is all my opinion, so take it with a grain of salt, is what I'm saying. Never completely invest in somebody's opinion. Make sure that you do your own fundamental, your own analysis, and you believe in what you're investing in, because you don't want to be that guy. So anyway, the goal is you always want to find something that is cheap. I know everyone talks about these penny stocks, and a penny stock is anything that's under $5 because of the volatility is rather high, but there's always big moves that can be made. So let's take this Tandem Diabetics Care, for instance, TNDM. And at the beginning of the year, these guys were trading right around this 270, 250 range. So like right in this area. And we can see on the chart what they did is they released a favorable FDA ruling on one of their diabetic products, which jumped their price. It went through. Here's the 200-day moving average. It jumped. So, and now they are trading in a favorable manner, where I would say that this stock is a buy right now, where it's in the Bollinger Bands, right around like $33. So obviously, almost like Bitcoin, you want to get in at a good time and ride the wave. So what are some stocks that potentially have this kind of growth potential? So the first one I'm going to do is this Aurora Mobile, JG. So it is a Chinese mobile big data platform. Their initial public offering launched a few weeks ago, and the general New York Stock Exchange was not very impressed. Wall Street didn't like it, so it's fallen relatively 32% or so from this $8 range all the way down to where it's trading right now. But it does have good potential because the growth, just reading up some news, they've gone up 305% before they went public. And so they've got low debt, and they're making good revenue. So it is potential. People are saying right now, with this relative strength index, it's not necessarily, I would say, in the bearish territory, but I don't have any moving averages because there's none in, because it just released. But as far as the Bollinger Band goes, I would say that this is a strong buy right now. Let's move on. So my next is going to be this Yoga Works, or Yoga. The ticker symbol is YOGA. It is off by about 30, 32, 35%. It is relatively cheap at this $1.25 range. We are seeing that it has been oversold. So it is definitely in bearish territory. This is definitely on my watch list. I'm not purchasing it yet because I don't know how far it's going to go down. I want to wait till I see it going above this 200-day moving average. So I want to see some growth, which potentially I'm going to miss out the move completely for it to get there. At least a crossover between the either 50-day to 20-day or vice versa. I just want to see some sort of a move, some buying power in here, some just upwards pressure. So this is a very risky investment at this moment, but they do have over 33,000 studios in the U.S., so which is a bunch. Well, just the yoga space in general, not just Yoga Works, but they do have some high accounts with, they give discounts to Google, and that's pretty much all the information that I have on this one. I do think it is extremely risky, But if you have a 1/4% of your portfolio or something that you want to put in towards something that could give you high gains, this potentially could be it. So I'm not going to take too much time. So this next one is trading relatively around 605 or so. These guys, HMHC, big publishing company, they use brands, publish brands like Curious George, Webster, their new dictionary, Cliff Notes, and I believe Lord of the Rings. They've had a bunch of Nobel Prizes, but their year-to-date performance has been awful. It's been negative 40%, as we can see. Just by technical analysis, this is it's being overbought. We're over our Bollinger Band, so there is potential that there is a move coming here to the 50-day, or actually the 20-day. But again, I'm going to wait until it crosses these barriers before I make a buy. You could, as one of my rule of thumbs, is whenever it reaches the top of this Bollinger Band, sometimes I'll buy and then I will sell once it hits the middle. So, like, if we look back, where's another example here? So here's an example. So here at $8.20 back in July, it hit the top of that Bollinger Band. It was near the 200-day moving average. It pumped up and then it hit it again. So went back to $8.45. So we're talking, $7.95. So basically 50%. Not 50%, excuse me, 50 cent gain right there. So there's a potential that you could do that if you'd wanted to, and just when it pulls back to here, sell again. But as far as a long-time holder, I'm going to wait till we get roughly closer to this 200-day moving average before. But if you want to make a quick buck, there is potential there. And from what I've read, these guys are trying to change the way. They're not going to focus so much on publishing. They've got some states, California, Texas, and Florida, estimated to make purchases for their school books, whether that's going to be online. I'm assuming it's going to be online because that's just where things are going now with students having iPads as opposed to actual physical books. It is a potential, and it did make my list because it is below $7. So moving on, this one is a buy for me. This is ID Systems. They are a top provider of machine-to-machine technologies. They help secure and track and managing cars, cargo ships. They've got some big contracts with Ford and Walmart and Home Depot. So that is a good for me. And just looking at this, it is on the uptrend. We've got relatively anything over 50 or so. Yeah, it's in that bullish territory. We can see that it is above the 200-day and all the moving averages. It's within this Bollinger Band. So this one to me seems like a good investment for the near to long term. And with their earnings, they say that they're planning to get into the small to mid industrial industry as far as to make 3G and long-term evolution, which is LTE, to basically make migrations for trailers, containers, and small vehicles to be able to track. So to me, that's all good. This is definitely a buy for me. And my next one is Fitbit. I've held on to Fitbit for a while. I've believed in Fitbit probably too long. I've let my emotions get involved, just my own bias about the company as opposed to looking at the charts. Because looking at the charts, this is definitely a sell at the moment. But I'm still holding on to my positions. I've lost too much on them. So again, take this all information with a grain of salt. I'm just going to try to be as unbiased as I possibly can. This stock made the list because it's under $7. It's at this $5 range. There is good potential. They have no debt whatsoever. They have been losing money the past couple years because of Microsoft and Apple. and Garmin, all these other making these smartwatches, but they do have a good price range as far as the Apple Watch is $300 to get in, and theirs are relatively $80 to $200 for their high-end stuff. But looking at the stock, it is in this bearish downward trend. It is being oversold at the moment. They've been working hard to get the healthcare market. I know if you go to hospitals, they give discounts to employees to track their steps and yada, yada, yada. I know fundamental analysis says that this stock is fairly cheap. Their price to their sales ratio is very minimal. Their CEO says that the company is going to return to growth in the next second half of this year. We will see if that happens. But there it is, folks. Fitbit made the list. So the next one is this Trivia Go TRVG. This was a high growth stock at one point, basically a year ago. They hit $22, and since then it's been on a trajectory downward. So the only advantageous I see about this is they are selling at a steep price to sales ratio that's only 1.26 times their earnings. So it is at a very deep discount because it is at $4 right now. So it is considered a penny stock. They are below 5. It is below 7. Did make the list. It is definitely looking like still a sell at this point, but it did make my list for cheap stocks that have potential if they're able to focus on profitability and help monetize their traffic so that they're not losing any more money. So the next one is Groupon. They are trading at this under $5 range. They have a huge user base, relatively around, I guess, 50 million or so, and 70% of that is coming through smartphones. I'm sure we've all used Groupon at some point. There has been some speculation that Alibaba, which is a big e-commerce site, it's almost like Amazon, could potentially buy this. Right now, it is looking as a potential buy, but I'm waiting for it to go a little bit higher and break these barriers as far as these moving averages. So I'm not going to take too much on here. We all know what Groupon is. So there were 7 cheap stocks under $7 that have potential growth in the near to long term. So again, guys, invest at your own risk. I just wanted to share some stocks that are on my watch list. And let me know what you guys think, and take care.